These are the stock picks for the week of September 28th, 2015. We have a theme today, which is the American exchange. So we are looking at the Amex market instead of the New York Stock Exchange or NASDAQ. All of these stocks are from that specific market. That allows us to look at some stocks that are probably less known to most investors. They do have lower volumes in general, but that's not going to be a problem if you're just buying a stock. It's going to be a problem if you're playing with options. And it gives us exposure to things that we usually don't see in these weekly stock pick videos. For example, closed-ended funds. If you don't know what a closed-ended fund is, it's essentially like a mutual fund, but works entirely based on supply and demand. What happens is, let's say you want to establish a portfolio of stocks. So you decide to create a closed-ended fund. You create a portfolio of stocks. You list that fund as a stock via an IPO, and you raise money in that way. And you never issue more shares of your stock after that. So it's 100% supply and demand. There's never new outstanding shares added. So you get in early and it grows. Well, that's great. And then getting in later is going to be harder simply because the people who are already in typically want to stay in. And likewise, if a fund is doing poor, if it's doing poorly, people are going to be dropping that fund and the demand goes down and the price goes down. So these work on supply and demand. Not all of these are closed-end funds. We're going to be looking at each of them. I actually did the analysis a couple days ago, but due to my internet being out for about a day, I forgot. I still have the list of stocks though, so I'm gonna refresh my memory and actually give you some info on what these stocks actually are through Morningstar, and we can just figure out what we're dealing with here. Okay. All right. So the first one is UTG. And by the way, besides Morningstar, we're going to be using stockcharts.com like always, and I'm going to be using StockTA. I usually look at StockTA mainly for support and resistance levels. We're going to be using that as well because I remember some of these being support-based plays. So let's get into it. The first one is Reeves Utility Income. If you scroll down, it'll tell you what it is. Here it doesn't. Yep, here it doesn't. So that means it's a fund. This is probably a closed-ended fund then. Indeed, CEF price, closed-ended fund. So this is one of those supply and demand funds. You generally want to look at a few things when you're analyzing the fundamentals of a closed-ended fund. First of all, where they are investing. So utility companies in both the US and abroad. And this makes this a pretty good defensive stock if the market crashes or has a correction. And you're also going to want to look at the premium versus the discount. If it's selling at a discount and you think the fund is going to go up in price, well, it's usually good to get in. So, and when it's at a premium, it's not a good idea to get in general. So those are the two things you want to look at. We're going to go ahead and do the technical analysis because that's what these stock picks are mainly about. So here's UTG. And when you use stockcharts.com, you get a wide array of indicators. I always switch the simple moving averages to look at a much shorter time frame, 20 and 30, because we're swing trading here. I like to look at the Arun lines. I like to look at the slow stochastics and the MACD line. All right, the Arun lines usually give us a pretty good buying or selling signal. MACD gives us the direction and the strength of the momentum of the stock, and the stochastics tell us, or at least hint at, whether the stock is overbought or oversold. So it can give us an idea as to whether the stock is overvalued or undervalued. But then again, with closed-ended funds, you can just look at whether it's selling at a premium or a discount. All right, so here's what we got. Recently, the red Arun line just dropped below 30. So we are more or less at a standstill. We're trending sideways, that would imply. But in many situations, if you are bearish on a stock and then that red or rune line drops below 70 and then drops even further down, you don't want to be bearish for too long. We are seeing, in addition, the faster of the two moving averages, the blue line, starting to encroach upon the red line and possibly pass over it. We're not there yet, but there is a good sign besides that, which is the price of the stock is above both of these moving averages. That's a bullish signal. Then we've got the MACD line. If we see the black, there's a lot of things you could look at in the MACD line. One is the black line crossing over the red line. That's a good signal for buying a stock. The second is them, if they are in the negative area and starting to approach the positive area, that's a sign that the momentum is switching to become bullish. If it's already in the positive area, then it's already bullish. Generally, in the positive area and moving upward is a good sign. But if we're swing trading, we don't really care if it's already in the positive or negative. We just care that it's moving upward. And if it's not too far below the 0 point, then it's a decent time to buy. All right. Recently we saw a overbought signal, but that's no longer true now that the lines are both below the 80 level. So all of those are giving us pretty good indications that this is going to be a stock or a closed-ended fund that's going to go up in price. As you can see, we don't have a big trading region. In closed-ended funds, you see them usually oscillate like this. But you can swing trade these. And if you had swing traded this, or actually position traded this, if you had held on to this for a month when it was at a low, you would get a decent ROI, just like you would through a swing trade. But more importantly, we're buying a closed-ended fund here, and you get a distribution. Here's your distribution rate. So it's a decent thing to hold on to. If you don't want to swing trade, if you want to hold on to something, if you're using these stock picks to, do some research on your own as to what stocks to get in on, this would be a decent choice, UTG. It's got a decent distribution rate, and it looks like it's going to start heading upward. And again, utilities are a safe bet in a uncertain atmosphere. So now that we're looking at a uncertain market, we've been in a bullish market for the past 7 years or so, and every 7 years or so we get a bear market. Getting into utilities, if you want to get into stocks and hold on to them, is usually a good idea. Utilities are something people always need, and there's always going to be money coming in from utility companies, even if other companies aren't making so much money. All right. Next is ERH. Remember, these are all on the Amex. ERH. Okay, so ERH. Again, a utility CEF, closed-ended fund. And this one is looking at investing in high-grade debt securities and stocks. So it's pretty diversified. The distribution rate is higher than the one we saw before, and the price is lower than the one we saw before. So let's take a look at the fundamentals. All right, so we're seeing basically the same pattern with the rune lines that we saw with the previous CEF. We also see a drop at the end of August. There's probably a reason for that. You can go check the news. We don't really care when we're doing technical analysis. And the lines, the moving average lines, are looking pretty similar to those of the previous stock, but this one's looking a little worse. And the same thing, we're seeing the momentum shift upward, and we are not in an overbought area. This is a pretty iffy technical analysis, but I think that I'm recommending this because I believe that we had a support level a resistance level that was just broken. We can take a look at stockta.com to see if that's true or not. Let me remind you that I'm looking at these essentially for the first time because I forget the reason I chose all these stocks. But there we go. We got a support level at 20. I believe we just broke that with a confidence of 20. Support level is at 17 or 10.78. We just broke it. Let's see if that'll hold. If it does, this would be a nice CEF to get in on, even for a swing trade, if you're buying large quantities of it. Remember, the volumes of these are not high, so getting in and out is not going to be so easy. These are not what I typically recommend in swing trading. These are better for position trading or long-term investments. And in the possible bear market in the future, this would be a nice one to hold on to. And this would be a nice time to get in on it. So that, again, is much like the previous CEF UTG. Let's move on to FSP. FSP, let's do it. Go. Go, man. FSP. Okay. For some reason, we can't find it. But it's there. Franklin Street Property Management Corp. Not management. Alright, what is this? This is a stock. Pays out a dividend. Yield is very high. This might be something you want to hold on to. Market cap is alright. So what do? They're a real estate investment trust. This is essentially what you really should be investing in if you want to invest in real estate. It's a lot better to get into REIT, I believe, than to buy a home. Essentially what you're doing is you're putting money into a company that buys real estate and then manages the real estate, does all that stuff that you would do if you were a real estate investor. And it doesn't require you to put down huge amounts of money to buy a house. So that's what we got here. If you want to look at the fundamentals, they all look pretty good. Beta's a little high, so that's expected. If the economy goes down, real estate generally will also go down. But let's look at why I am recommending this. Rune lines don't tell us much. We have just passed over these two moving average lines in real price. That's always a good sign. You can see that the candlesticks have been moving us upward. We had a doji star. I like this candlestick, the doji star, and I don't trade the doji star by itself. I always wait for the next day to see what happens, because the doji star is like a 50-50 situation. What it usually means, you see this doji star here, it's a very thin horizontal line with a very thin, well, with a vertical line that goes through it. So it looks like a star because, well, the open and close price are basically the same, but the price of that stock during the trading day went up and down so that it looks like a star. We got the bottom and the top lines more or less the same length. Now the next day we see the candlestick is up. That means the investors at this point during the doji star day, investors and traders didn't know whether to value this at that price, whether it was undervalued, overvalued. The doji star represents indecision. And usually when you break out of a doji star, you'll see a breakaway. Not usually, but you'll often see a breakaway. And there's good reason to watch for these doji stars and then see if there's going to be a breakaway in a certain direction. As you can see, we had a really high volume on one of these days where the stock value dropped quite a bit. The power of the bears was tested all the way down to 10.4, but I believe that these candlesticks afterward, for example, the bullish harami, the doji star, and then the confirmation that the investors decided, actually it's worth more than what that doji star was telling us. Then we see the same momentum pattern. We got the black line passing over the red line, moving into positive territory, and we are not currently overbought. I like all of these signs. I think we're probably right over a support as well. We can check that out real quickly. But again, this is much like a CEF. This is something you're probably going to want to hold on to because of that yield. And indeed, we are above a support, but the sad thing is we have a resistance level right above us. So if you want to swing trade this, you probably want to buy large quantities of it and then wait for it to hit that resistance level, see what happens. If it starts to bounce back, get out. If it doesn't, hold on and take that yield, take those dividends. All right, so this is a little different than my normal newsletter simply because we're looking at investments this time for the most part instead of just easy in and out swing trades. All right, the next one is IAF. This is another CEF, closed-ended fund. This one is on for Australia. All right. Um, the distribution rate's quite high, 14%. And what are they doing here? It's essentially a mutual fund that gives you exposure to the Australian stock exchange. You can go look at their portfolio. The distribution's pretty high. You can do all the fundamentals yourself. I think it's probably good. I'm not an expert on the Australian economy. I don't know how they're doing right now, but I mean, this is a cheap CEF, and I chose this because of the technicals. We see it just like the other CEFs. We see a long-term downtrend, which is not good. We do see a hammer candlestick pattern, which signifies a reversal. And I probably chose this stock because of how gappy it is and the fact that we have an area gap right above us. So I'm pretty confident that this is going to go up at least up to that area gap. Then again, you have all these, you have the momentum moving upward into positive territory. If that reverses, it's not going to be pretty. But if it does go into positive territory, we've got basically what we saw with the other CEFs and something that looks similar to that REIT. What are we doing? IAF. Problem is we got a big resistance right above us, but it's above the gap, so the gap should still fill. And just like I said last time, the play style is pretty much the same. Get in, wait till you hit the resist. If it stays at the resist or even breaks the resist, hold on to this stock for those dividend yields. And if it begins to bounce back, go downward, get out. All right. Last one on the American Exchange is Glow. What is Glow? Sounds cool, right? It's probably pretty cool. It's on the American Exchange, so it's not a big stock. We're looking at a penny stock here. It is a provider of video collaboration services and network solutions. So they're a B2B company. Fundamentals don't really tell you much here because it's a penny stock. Penny stocks generally move because of investor sentiment, not because of fundamentals. But let's look at the technicals here. We actually are seeing with the Arun lines a sell signal, not a buy signal. And you can see the stock is really weird. The volume on one day brought us way up to $1. And then the next day we opened at half of that. So I feel bad for the people buying at these levels, but this is how you play penny stocks. You wait for the jump upward, and if it's truly a reasonable jump, if there's actually some good news behind it, good fundamentals behind it, you hold on to it and you let it ride. And you find it outside of that penny stock region one day and you realize how much money you made off of that. But for us swing traders, what we're looking for is this kind of pump and dump where something happens, people get excited, the stock goes way up, and then you sell off and walk away. The most recent candlestick pattern we have is a very, very long hammer candlestick pattern, which typically signifies at least a short-term bullish reversal. And what we're going to be looking at is the fact that, first of all, well, let's look at the momentum first of all. Momentum's still headed upward, all right? Just like the other ones. But we are at a oversold area. And this one candlestick, this one day, probably skewed these indicators quite a bit. You can see the MAC D line, the fast one, is going way up, almost vertically up. And you can see that the red stochastic line, which is more of the confirmation of the two lines, confirming of the two lines, is almost like vertically downward. But what's important here is that these two lines are both under the 20 level, and the black line is now beginning to pass above the red line. That alone could be a buying signal. And then you get a buying signal confirmation when that black line passes above the 20. I would say get in on this now and see what's going to happen. It's only a penny stock after all. You could possibly see something like this again and double your money. But then again, it could slowly go downward. I'm going to say the former is probably more possible just by looking at these technicals. And overall, what we're looking at are a bunch of investment instruments and one penny stock. So, I mean, this was a weirder week than usual because I decided the theme would be to look at the American exchange instead of the New York Stock Exchange or instead of the NASDAQ. So we have a weird selection of stocks. We've got 3 closed-ended funds, 1 REIT. All of them would be good for long-term investments. This would be good if you're interested in real estate, and then you got a penny stock. So I'm sorry if I disappointed you without giving you, a blue chip or something that's going to be a decently traded growth stock or something like that. But I wanted to have a theme. And sometimes the theme ends up giving us some weirder than average swing trades. So really, Glow is probably the only swing trade here. Everything else I talked about is more of a good time to buy an investment instrument. And remember, these first two, they're utilities, so they should do well even in a bear market, if a bear market does, in fact, hit us. If you have any questions, please leave them in the comment section below. Also, please subscribe, and you will get notifications every week for 5 stocks that will probably go upward in the coming week. Thank you.